Good morning. Thank you, Jashwin, for joining us here today. We're going to have a bit of a chat around the various uh, business structures that are available to foreign companies and foreign entities that want to expand operations into South Africa. You know, despite challenges such as load shedding and infrastructural and political challenges, South Africa remains an attractive business destination, still largely considered the gateway to Africa, from what we've seen. But why don't you tell us a bit more about the structures that are available to foreign companies, multinationals that want to expand into South Africa? How can they structure their business?
Thank you, Rickon. So, when it comes to doing business in South Africa, it's a market we've been exploring for a number of years now. And a key focus, not just for South Africa, but the continent at large, is having a local partner in your jurisdiction of choice is essential to navigate not just the tax intricacies, but the governmental and statutory compliance intricacies on the ground.
Right.
Now, just taking a quick hop across from South Africa, there's a number of countries up in Africa, such as Kenya, as an example, or Mozambique, where your individual or your firm on the ground still physically files your manual returns.
Oh,
So
wow.
it's actually things like this and these nuances that have led us to grow this business of setting up companies in South Africa for foreign companies. And as you rightfully said, it very much is part of the doing business in Africa, that African gateway structure. And there's many ways it can go. But for the purpose of this discussion, we will cover very simply a branch versus a subsidiary, the setup processes, what the requirements are, the rates of taxation, and any favorable benefits. Naturally, there are more intricate structures available.
Right.
You've got your public company, your private company, etc. But when you're talking offshore, you're talking global expansion, multinational enterprise. You've got a plethora of structures that optimize taxation and enable not just the free flow of funds between related groups, but also the free flow of employees on assignments with a very specialized set of skills.
Right. Yeah, just to circle back a little bit, you mentioned a branch and a subsidiary as the two basic building blocks of a structure to expand into South Africa. Why don't you tell us a bit more, a bit of a definition? What is a branch and what is a subsidiary?
Yeah, so
Mm.
a holistic view of it is any foreign entity that really wishes to conduct business operations in South Africa shall be required to create a presence by establishing a branch of the company in South Africa. Bear in mind, a branch is treated as an external company, which we'll dive a bit more into shortly,
Okay.
or incorporating a subsidiary of the foreign company in South Africa, which, for all intents and purposes, is considered a South African resident company. Now, these incorporations, in their very nature, are canvassed in the South African Companies Act. And by virtue of which, as I said, the branch being external is actually not regarded as South African tax resident
Right.
and is subject to a flat rate of 27%, the same as the subsidiary. However, the tax net is the key difference, where the branch's tax net expands only insofar as South African sourced income, whereas the subsidiary, the net is cast over the global income, both at a 27% flat rate.
Oh, wow. So would you say then that a branch is perhaps a more favorable type of company as opposed to a subsidiary, from a purely tax perspective?
So, from a purely tax perspective, yes. And the unfortunate thing is, we have many interactions where we get as far as this is the difference in tax. And I mean, even further, a subsidiary is liable to a 20% dividend withholding tax, subject to potential application of the double taxation agreement between South Africa and the other contracting state. Um, Whereas a branch, being an external company, is not subject to the same principle. Now, on a purely tax basis, yes, branch makes a whole lot more
Right.
sense. But the problem there comes in when you are, one, working with South African clients or consumers
Right.
that are in specific sectors, such as mining, mineral, your oil and gas sectors, etc. And more so where there are tenders at play.
Mm.
in that you have to have that South African company, South African resident company, registered for VAT, fully compliant, tax clearance certificate
Right.
issued in order to be actually eligible to get this tender.
Right. So it's very much sector specific and depending on the needs of the foreign company, depending will rather dictate which structure they select to incorporate. Now, from a high level view, what are some of the key distinguishing factors to actually set this company up or incorporate it in South Africa? What is the process? What are the requirements?
Yeah, so I'm gonna go a little bit off script here,
Yeah.
but when it comes to setting up a company in South Africa,
Mm,
for ease of management function,
mm,
where an international stakeholder, it is recommended that you go the subsidiary route, and it's quite
right.
simple in the sense that under South African law, you are permitted to have a single or multiple foreign shareholders in a South African company holding up to 100% of ownership in that
Oh wow.
company, whereas other countries such as a Zambia require local shareholding and directorship. And there's specific programs where initially it's 100% foreign held, and over time there's annuity give back to the local Zambian market.
That's certainly a big benefit and an attractive incentive for foreign companies to invest in South Africa and create these structures. Um, Stemming from that, what are some of the benefits and disadvantages of a subsidiary and a branch, other than the sector specific examples you've already mentioned?
So outside of the taxation element of it, right? We have the international cross-border compliance side of things.
Right,
Now, when it comes to a branch and a subsidiary, these are treated entirely differently, which is a little bit confusing for most. And it's not something that is implemented at a South African domestic law level, but
right,
rather by the OECD themselves. And that speaks more to the transfer pricing, the related party transactions,
right,
and the specific arm's length, which would then educate any sort of master services or service level agreement or management fees, etc., between the respective entities.
right,
Now, on the reporting side, it is far easier reporting with a subsidiary. And the reason for that is with a branch, the branch is treated as an extension of the holding company, as though it is an
right,
arm or leg of the holding company. Now, what that means is it becomes very blurred to actually determine and apply an acceptable arm's length, one.
right,
And secondly, depending on the nature of the contract, it ultimately ends in a case of the holding company is contracting with itself, which, as
oh
we know
wow,
from a legal perspective, automatically becomes very problematic,
yeah,
especially where scrutinized at an audit level.
right. And from an exchange control perspective, as particularly with the South African Reserve Bank, are there any differences where, let's say, the foreign parent company or holding company interacts with the South African entity, whether it's the branch or the subsidiary? Are there any key differences from an exchange control perspective, let's say with loans or repatriation of dividends per se? Are they treated differently?
Yeah, so right off the bat, and this is literally
Mm,
at company setup stage, you must remember that because a branch is deemed an external company and not a resident of the Republic of South Africa,
right,
the shareholding or the control of that branch is automatic with the holding company, right? It
right,
is an extension of the company. Therefore, you don't need to prepare share certificates, share registers, etc. A subsidiary, on the other hand, because it is considered a South African resident and an independent entity, even though related parties,
right,
you would need a share register, a share certificate, and those would need to be endorsed by the South African Reserve Bank, where the
right,
shares are held by a non resident individual, entity, or trust.
right,
Now, taking it one step further, so that is at your very beginning, at the inception and the registration or establishment of your entity.
right,
When it comes to funding, any inbound funding does require a SARB endorsement,
Right.
especially loan funding. And that extends further also to capital funding.
Right.
So whether you're getting it back or not, it still needs to be endorsed because of the inflow. And very logically, the reason for that is, and especially in the case of a loan and specific financing agreements such as deep discount bonds, etc., when the repayment takes place, and remember, there has to be an interest rate that's charged at arm's length. So
Yes.
when that repayment takes place, both the South African Reserve Bank and the South African Revenue Service
Mm.
need to be able to backtrack an account to say, this is a repayment against this inbound payment. And it needs to tie up year on year.
Right.
Obviously, you have your submissions to SARS, your ITR 14s,
Right.
and then you've got your annual return submission CIPC. Now, while we're still on the South African Reserve Bank side of things, the South African Reserve Bank, and together with the Financial Surveillance Department, have drastically stepped up compliance measures. And this is not something that, it's kind of been playing in the background for a while, but it really is a case of from April 2023 is when they released their most recent B2B transactional manual,
Right.
and that provides very stringent guidelines for every single kind of transaction, right down to the payment of rent in a building on behalf of a related party,
Oh wow.
and goes to the extent of the nitty gritties of airfare, accommodation, all expressly mentioned in this guide. So that is one thing to actually be aware of, and whether it was a consequence of the grey listing or whether it was something that has been under development but in the
Mm.
shadows. Factually, it is now a reality for South Africans, and it's really quite easy to manage when you have the correct team of tax, legal, and compliance specialists
Right.
assisting you along the way, who manage these relationships not just with the Reserve Bank but with your local bank in facilitating the setup of your bank account. I mean, any company requires a bank account to operate, to do business
For
in South
sure.
Africa. And the very nice thing about specific accounts is the signatories never have to set foot in South Africa prior to opening that account. No one has to be here. No one has to go to the bank. Those days
Right.
are long behind South Africa.
Yeah.
It now is all a case of you have an appointed representative. They engage with the bank on your behalf. They pre-populate those forms on your behalf, and
Yeah.
they open the bank account, and they assist you in managing your transactional flows, simply so you can focus on your primary business functions
Right.
rather than worrying about all of that admin. And that is exactly why we have a treasury team here at Tax
Right.
Consulting South Africa to provide the most efficient and easiest banking solutions to all of our foreign clients.
Wow, fantastic. And speaking about admin, what would you say are some of the key ongoing compliance or maintenance functions that need to be maintained with the local revenue authority, being the South African Revenue Service, SARS, maybe the Companies and Intellectual Property Commission, CIPC, and so on, those two statutory regulatory bodies? What are the ongoing compliance obligations that a branch or a subsidiary company may need to engage in?
Oh, where do we start with compliance? And this is a long discussion. So, in summary, all right, where a South African entity and including a branch have employees based in South Africa,
Right.
they will need to be registered for pay as you earn tax.
Right.
Right? That comes with the Skills Development Levy and the Unemployment Insurance Fund.
Okay.
Your PAYE returns, as they are called, are filed on a monthly basis with biannual reconciliations, and that is with the Revenue Service,
Right.
right? Those obviously correlate to the IRP5 certificates that you would issue to your South African employees.
Right.
Now, where a company is exceeding 500,000 in turnover per year, there is a there is a optional VAT registration,
Right.
and where they exceed 1 million, per year, it is then a mandatory registration for VAT.
Right.
Your VAT returns at the onset are filed every second month, but there are instances, and especially where multiple compliance audits have taken place, where VAT returns are filed on a monthly basis, and the same
Right.
principle of the biannual reconciliations, also with the Revenue Service.
Right.
Then you've got your provisional tax returns filed twice a year, and you've got your annual tax return. Right? That must be accompanied by your annual financial statements.
Right.
Now, that is very much on the SARS side.
Okay.
And there's two key functions that every company needs to have, whether it is a branch, whether it is a subsidiary. And these functions are provided for in part in the Companies Act, being a duly assigned or appointed representative
Right.
of the company established, and in part in the Tax Administration Act, speaking to both a registered representative and a public officer.
Right.
Now, although different functions, the registered representative speaks more to a SARS function, and the public officer speaks more to a general regulatory and compliance function.
Right.
The key requirement for both of these offices to be held is that they are held by South African residents physically based in South Africa.
Right.
And that is, above all, probably why it is essential to have a trusted partner in South Africa to actually assist you along with your setup, as well as be in a position to provide you with those ongoing compliance services,
Right.
coupled with payroll and accounting, especially when you're just starting. For the first 12, 18, sometimes 24 months, you do need to outsource those functions. And it's just so much easier when you have a single point of contact.
Right. And in instances where a foreign company has now perhaps set up a branch or a subsidiary, and they maybe through ignorance miss some of these compliance duties, they miss the odd return here or there, what are the likely effects of that on their ability to actually do business in South Africa or the broader African continent?
So it really depends on the level of business they're doing.
Mm.
So if you are very much conducting kind of lower level, then you miss a return, you have a non-compliant status, you can't get a tax clearance PIN.
Mm.
But on the lower level, most end users and suppliers are not asking for a tax clearance PIN.
Yeah.
But if you are at the SOE level, higher, the international level, you're engaging with cross-border trade,
Right.
even throughout Africa, you need that tax compliance, which means missing a return
Yeah.
or being late on a payment not only results in penalties being imposed and interest on debts due to SARS,
Right.
but further will inhibit your ability to do business.
So it is quite critical that compliance is carefully monitored and maintained, from what I'm
Yes.
gathering from what you're saying.
Yes, that is absolutely correct. And where
Mm.
where you have ventured into the realm of non-compliance and SARS or CIPC are correctly strategically approached, we do generally find them quite amicable to assisting
Right.
in alleviating the pressure on you and working with your designated accountant or tax practitioner to remedy that non-compliance.
Right. No, fantastic. Then moving on into other relevant and related topics. We've now discussed, the inbound setup from a foreign company into South Africa. What are some of the structures available to local South African entrepreneurs seeking to grow and expand their business and formalize the way that they maybe trade? They might be a sole proprietor, trading out of their garage currently or online, but how can they best expand their business locally in South Africa?
So when it comes to your structures in South Africa, we'll start with you can't do a closed corporation anymore. And I get
Right.
this question at least twice a month
Sure.
from inbound clients coming in and saying, listen, can we do a closed corporation? And no, you can't, because from 2008,
Yeah.
you were not allowed to incorporate any new closed corporations. And ideally, if you had a CC under the old closed corporation legislation,
Yeah.
you should have converted it to either a public or private company under the
Right.
Companies Act post 2008. Now, in terms of currently available structures,
Yeah.
we've got the desirable structures and the undesirable structures.
Right.
As an example, nobody really wants a personal liability company. Factually,
Yeah.
something happens with the company and you are suddenly personally liable, whether it is company runs into financial difficulties and can't pay the receiver of revenue or can't pay a creditor or whatever the case is,
Yes.
you're then personally liable. State-owned companies, again, or state-owned enterprises, they're
Yeah.
also referred to, that is very much a tender game.
Right.
And if you kind of go that route, you ultimately end up with little to no control over the actual decisions and operating of your company.
Right.
It's literally in the name of state-owned enterprise.
Yes.
And you've got a non-profit company, which is, it's needed,
Yes.
especially in a country with South Africa where, the economy is very volatile. NPCs and NPOs are essential to assist in aiding the more underprivileged of society.
Yes.
So by all means, a very honorable venture. And suppose depending on how you play it,
Right.
we've seen it in the news where some NPOs are making billions somehow. We
Yes.
don't know. But the general consensus is a non-profit company is not for profit
Right.
and really not something for entrepreneurs. And a non-profit company is somewhere you get to once you've done the business for 2, 3, 4 decades and you've got the funds to now have this non-profit company.
Right.
So really, the discussion around helping local South Africans and local entrepreneurs set up business in South Africa floats around a private company and a public company. And quite frankly, your public company is a corporation where the ownership is distributed amongst the general public, which
Right.
again, unless a company has grown to the point where it has listed shares that are available for distribution,
Right.
you typically want to stick to a private company.
Right. Now, for an entrepreneur who's maybe been trading for a year or two, in his own personal capacity, how complex is it to set up a proprietary limited company or private limited company, as an example, and what are the benefits of doing so?
Look, so there's a few hoops to jump through. So it starts with a name reservation process.
Right.
Right, that is done through the CIPC, and there you need to submit to them at least 4 names, right? 4 name options. You see what's available. They check if there's any copyright infringements and likeliness to other names already registered.
Right.
Then you start with the main incorporation process, followed by the issuance of shares in the company.
Right.
That comes with the share register, the share certificate. Now, unlike our earlier discussion of foreign companies or foreign individuals setting up entities in South Africa,
Yeah.
these shares do not need to be endorsed by the South African Reserve Bank simply because they're held by South African residents.
Oh, fantastic.
Right.
Okay.
However, do remember that when it comes to a private company, the company may not offer its shares up to the public, and there are restrictions placed on the transferability of those shares.
Right.
Right. You can then appoint your directors, and all of these changes, appointments, removals, etc.,
Right.
need to be captured on the CIPC platform
Right.
together with certain notifications to South African Revenue Service. And the reason I
Okay.
say that is because last year, granted it was already in play legally, but last year it was very forcibly implemented and actively adhered to that the beneficial ownership register
Right.
be completed on the CIPC as well as SARS to tie up to each other. And where any beneficial owner holds more than 5% of shares in a company, that declaration as beneficial owner needs to be made on CIPC, SARS on behalf of the company, and translating to their personal tax return.
Right.
So that's something to kind of look out for, as it's a very new requirement. But we will cover that in more detail later in the series on setting up foreign company compliance.
Right. Then what we've also seen in the market is a trend of existing proprietary or private limited companies and some publicly listed companies as well, expanding beyond the local South African economy into markets. You've mentioned Kenya, Zambia, Nigeria as an example, the Congo, and they tend to set up local companies in those African jurisdictions. What are some of the cross border international tax risks that these outbound local South African companies must keep in mind?
So, what we predominantly see is where entities or individuals intend on setting up these offshore expansions to their current business model, or as a means of wealth preservation, depending on kind of their age category. Now, your biggest risk there
Mm.
is what is known as a controlled foreign company risk.
Right.
And quite simply, what this means is the foreign company has more than 50% of its shareholding
Right.
either held individually or cumulatively
Right.
by South African resident taxpayers,
Right.
and that includes individuals, companies, partnerships, or any sort of juristic legal entity in South Africa
Right.
that holds and controls more than 50% in a foreign company.
Then we now have a CFC.
You now have a CFC.
Now,
And
what does that practically mean for
now,
us?
to get into a CFC, I think we're going to need an entire session.
Yeah.
But at a very high level, the key consideration or the key concern of a CFC is a net income imputation.
Right.
What this translates to is because of the shareholding in the foreign company, it is considered in the eyes of SARS and the Reserve Bank as a South African company, not necessarily as resident, but falling fully within the South African tax net, meaning any profits that flow through that CFC and may subsequently be imputed to a South African resident are then fully taxable in South Africa.
Right.
There are specific exemptions as well as mitigating structures to be used.
Right.
However, I do think that is a discussion for a little bit later in this podcast series once everyone is more familiar with the basics.
Right. Fantastic. Thank you for your time, Jashwin. Lovely speaking to you. Yeah.
Thank you, Rekhan. It's been a good time.